Okay, let's get started. So thanks for everyone for joining this week's live product walkthrough and Q&A session. Today we're going to be discussing the default settings within Snap when creating new plans and how you can go about changing them. My name is Dan McCollum and I'm a customer success specialist here at Snap. So let's just take a look at today's agenda. Before we get to that, if you do have any questions within your Zoom window, there should be a Q&A box. So please feel free to submit any questions that you may have during the presentation. If I'm not able to respond to those within the presentation, just be assured that I will get back to everyone by the end of the day today. So in regards to the agenda, again, we're going to be going over some of the default, excuse me, settings within Snap, starting with the client page. So the first window that you see when creating a new client. We'll then hop into scenario setup, the planning pages, and then finally the client reports. Now, before I get into the main presentation, I do just want to discuss our Help Center, which can always be found at the top right of your window here once you're logged in. There we go. So this is our main Help Center page. So if there is something specific that you're looking for, you can usually find it within here by simply searching for it. Or we do have different main topics. So you can go into there and find any articles or how-to walkthroughs on how to model anything within Snap. Again, it's a great resource. And then for future live sessions, if we go into webinars, there is an option to register for future upcoming ones by simply registering for the next couple coming up. So I'm going to go back into Snap. So we're back on again, the main client page here. So a few things that I just want to discuss is our client list. So we have all of our clients that we currently have included within Snap. You have the option of showing them or going here and you have the option of hiding them. And then you can simply search, for example, by last name. And then all clients with that last name will appear. Let's clear that out. I'm going to show all my clients again. You do have the option of reorganizing them by name. So for example, A to Z or Z to A, and also by when you last edited them. So newest first or oldest first. Snap by default will organize them by the last date that you made edits. And then also if you do have the advisor business subscription, you have the option of sharing your plans with the team. And there are certain filters. So these are the ones owned by me. So the ones that I haven't shared with anyone, you can filter those out. You can also filter shared with some. And if you want to confirm who those people are, you can click on the little icon here and you can see who they've been shared with. And then finally, the ones that I've shared with my entire team, again, indicated by the icon here. And again, you can see who exactly has access to those plans. So I'm just going to remove those filters. And I'll hop into our sample client, John Snapper. You have the option, we're going to start with scenario setup. So I'm going to click on the gear icon. If you want to go directly to your planning pages, it would be the second icon here. And then finally, any client reports that you would like to review would be the third option. So again, we're going to start with scenario setup. And we're brought into our first page here. Again, very basic information for John, which I filled out. But I do want to discuss the defaults within the general setup here. So if we're talking defaults, SNAP will use age 65 as the retirement age, as well as running the plan until age 100. Obviously, you have the option of changing that retirement age based on your client's retirement goals and how long you run that plan. That's fully customizable. In regards to the inflation rates and the rates of return, these are both recommended by FP Canada. And again, these are SNAP's defaults. So for inflation general and for CPP and OAS, it will assume 2.1%. And then for rates of return based on the asset class, you can see the various defaults here. You do have the option of coming in and changing these as well. Again, to note, these are recommended by FP Canada, but they do not account for any fees that you may charge. So you may want to adjust those down to account for those. And then in the event that you change any of the defaults here and you say want to use them in future projections, you do have the option of coming down to the defaults button here and then saving those settings for any new scenarios that you introduce into Snap. Okay, so I'm going to now hop over into our incomes page. And by default, Snap will have an employment income already included. It will be at 0. I've updated this to 100,000 just for illustration purposes. And again, it will default to employment, taxable, and RSP eligible income. And it will stop that income the year before retirement. So in this example, we have John retiring at 65. So the income will default to stop at 64. And then under the assets, you will notice that this first line here will already be included, so a non-registered portfolio by default with a 0 value. And then I've gone in, again, for illustration purposes and included a few different accounts. Now on this page, I do want to just tab over to the subheader TFSA. And discussing TFSA contribution room, SNAP will default to the annual maximum for this year, which is 7,000. However, if you have a client who, for example, hasn't contributed to a TFSA or has an amount of carry forward from previous years, you can update that value here. And the very same thing can be said for the RSP RIF tab. Again, SNAP will default to the 18% of the income that you've included under our incomes, which was 100,000. So 18,000 of annual contribution room, excuse me. However, again, if your client has unused contribution room, this is where you would update that. And I'll touch on this later, but the conversion age, Snap will want to convert any RSPs over to RIFs at age 71, and then income would start at age 72. Now going over to our government benefits. So SNAP, again, will default to the national average indicated here, the 56.87. So if your client is unaware of what they're entitled to, and you want to make an assumption, this may be a very fair assumption to make. However, if the client has provided you with the figure from Service Canada, you do have the option of updating that, whether it be entering the percentage, or if they actually have the dollar amount, you can enter the dollar amount here. And then in regards to the start age, Snap will assume that the client will start taking CPP at 65. But depending on your client's goals, you can update the retirement age here, for example, 60 or age 70. And then down here, Snap will assume the full OAS benefit at age 65. However, if your client has been a resident in Canada for that 40-year rule, again, you can update the dollar amount or make an assumption based on the percentage of the maximum. I'm going to go over now into settings. And then in regards to the portfolio settings, Snap will assume that any non-reg monies are going to be turned over at 5% of their value. And then the equity return allocation, you can see here, 60% for capital gains, 20% for Canadian dividends, and 20% for foreign dividends. Again, you can change these assumptions as well as the percentage that the portfolio would turn over. Going to our cash balance account. So in the event that Snap is running a surplus of cash in your client's projection and there's nowhere for that cash to go, it's going to open a cash balance account and that would earn a 2.4 interest rate. And then on the flip side of that, if your client is running into a shortfall in your plan, Snap will automatically create a cash balance account, essentially a loan, and that borrowing rate for that loan would be at 4.4%. Now going over to taxes. So these are the standard tax credits that will be applied in the plan when SNAP is calculating taxes, as well as if the client is assumed to pay EI and CPP contributions, those will be defaulted to be turned on. If that's not the case, this is where you could turn them off, or in the event that your client is self-employed and is paying into the employer's portion of the contributions, you can turn that on here. But again, these would be the standard defaults. And then if there's any federal provincial tax credits or tax deductions or taxable benefits, you do have the option to include them here. And you can indicate for how long those are running from and a to age. Now just going over to charitable donations. It won't be enabled. However, if you know your client is making charitable donations, you do have the option of turning that on here. And then you can enter any unclaimed for the last 5 years as well on this page. For now, I'm just going to leave that turned off. Okay. Now we're going to just hop over into our planning pages. So let's go here. Okay, so on the planning pages, there's a few things that I just want to touch on. In regards to the title of your scenario, it will default to, say, base scenario. There's a couple ways you can go about renaming that scenario. You can click on the actual title here and relabel the scenario and hit save, or clicking on the 3 lines here. And again, renaming scenario will bring you into that same window and you can change it and save it. So in regards to the cash flow management, it will start at retirement, which for John is at age 65. So you can see that's when our assumed expenses that I've entered for this scenario of 32,000 begin once the income is cut off. And what Snap is doing here is it begins to start drawing from the financial assets in order to meet the expense goal and taxes for your client. And if they have any debt payments or insurance premiums, for example, Snap, again, is doing that heavy lifting for you and taking out what's necessary to cover all those expenses. Now, just going up to our cash flow management options here. So you can turn cash flow management off. And we can see what that looks like. So I'm just going to disable it. Now you can see at retirement, our 32,000 has disappeared. Cash flow management is turned off. So what's happening here with the expenses is it's taking into consideration any income that is coming in, less any taxes. So what's left over under the nominal column is here, and Snap is assuming that is spent money. So I'm just going to go back in. I'm going to enable it again. Now you can see our 32,000 is still not indicated here, but this is a great illustration that I just want to demonstrate what's happening if there is a surplus in the plan. So obviously there's no expenses, so there's going to be a surplus in our plan now. And Snap will want to contribute that based on our cash flow management default order of contributions. So in regards to that order, if we want to illustrate that, I'm just going to take you up here. Let's show the cash flow management order for this scenario. You can now see here that there's two new columns for contributions and withdrawals. And in regards to contributions, the default order will be RSPs and then tax-free and then non-reg. So if there were no RSPs included in the plan, it would want to contribute to tax-free. If there was no tax-free savings account in the plan, or let's say it was assumed maxed out, it will then want to contribute into a non-reg portfolio. So if we move over at 65, again, we have the government benefits coming in. And if you wanted to see exactly what that was made up of, you can expand them out, these columns, by clicking on the arrow. So you can now see a CPP and OAS for that combined value here. And then again, after paying taxes, there is a surplus and it's being contributed to the RSPs on a proportional basis. So the smaller account value for the first RSP here is getting around 6,000, 6,100. The larger RSP has more being contributed to it. And then I'm going to now just enter our expenses back in that we had in our first assumption. So the 32 is there. I'm going to now run my scenario indicated by the yellow. And there we go. So now you can see we have our expenses back in. And then in regards to now the default order for any withdrawals, it's going to want to take it from non-reg money and then tax-free and then RSPs. So we have no non-reg money in this plan, but we do have tax-free. So you can see indicated here the value of the account. Starting at retirement, when cash flow management is turned on, we start drawing down the tax-free savings account first. And then you can see once that tax-free saving has been depleted, that is when the RSPs or RIF income comes in for those two accounts that we've included, again, on a proportional basis. So a couple things that we can do here. We can change the order of either contributions or withdrawals. So you click on the first one here and we click on our drop down. Again, for contributions, you can change that order. You can do it for 1 year, or you can do it for the entirety of the plan by copying it down to the end of the projection. And for the very same thing for the withdrawals, you can change that order. So for example, if we wanted to draw down RSPs first before that tax-free savings, we could do so by selecting these two options. And again, copying it down for the life of the plan, or just in any given year. So I've talked about the withdrawals or contributions happening on a proportional basis. However, if you wanted it to happen on a sequential, so if there's multiple accounts of the same type, you do have the option of drawing those down in a certain order. So let's just see what that would look like. So I'm going to save that. So in this example, we have two RSPs. I've now selected sequential. So you can see here, the first account that's included is being drawn down first. Once that account is depleted, you can see our second RSP or RIF account begins its withdrawals. Now, how you can order those, it goes back to how you set them up under scenario setup. So I'm going to go in So the first account entered here would be the first account that would be drawn down if we selected sequential order of withdrawals. If you wanted to change that, you can move the asset in this example up. So we'll move the larger account up. We'll then save that new order. And then let's go into the planning pages and see what that looks like. Okay, so now you can see the two accounts have been switched over. And then starting when income needs to be taken from the account, as in the tax-free again, has been drawn down, the larger account that we've reordered begins taking income out of the portfolio. Eventually, the minimum for the second RIF account begins. But you can see here, it continues just to take the minimum out of the account. It's not doing it on a proportional basis between the two. Once that account has been drawn down, we can now see that minimum payment increase once that account has been depleted. So let's just go and switch that back to proportional. And again, once that TFSA has been depleted, we can now see both of those RIF accounts beginning withdrawals and then eventually depleted. And we run into a shortfall in this example indicated by the red here. So one last thing I just want to touch on the planning pages is the compare scenario metrics. So I'm going to go here. Now we don't have a second scenario to compare to, but I do want to just touch on the metrics. So by default, Snap will include all metrics that are available within the compare scenario feature. In this example, our client doesn't have a corporate account, so this may not apply. We don't want that reflected in our compare scenario. So I'm going to go down here. And you can see here all the different metrics that are available. I'm going to unselect the corporate main header, and that will unselect all those metrics. And again, you can come in here and pick and choose which metrics on the personal side you may want included. For now, I'm just going to leave the corporate out. So if we go back, show the selected metrics, you can now see the corporate metrics are removed. And I'll just add those back in. And there we go. Okay, so I'm going to now go over to our client report. So starting with our report builder, by default, Snap will include every single page available within the client report builder for your report. If you wanted to remove any, you could simply either click and drag the page and move it over to the gallery, or you could remove it by just hitting delete. And then over in our gallery, anything that's not crossed out is a page that has not been included in our main section here. So you can see I just removed that cover page. It's now available in the gallery. So if we wanted to include that back, we could do so by just clicking and dragging it back in. If you wanted to start from scratch and remove all pages, you do have the option in this example of clicking the first page, scrolling down. I'm holding shift and clicking on the last page, and then again, deleting pages. And you can see now every page is available within the report, or it could be included in the report. I'm going to do our shortcut by adding all the pages back in by hitting AA. There we go. Now there is another way that you can select your pages. So for now, again, I'm including all my pages. If we disable these pages, I'm going to move over to our report editor. You can see here every single page checked off, indicating that it's already been included. And I like this feature because you can actually go in and see exactly what the page may look like within the report. So for example, our cash inflow chart. And then you can say, yes, I want that included, or no, I don't want that page included in my report. Another great feature that I want to point out in regards to our charts is you do have the option of unselecting any of the metrics here. So for example, if we just wanted to see what the RIF income would be in those years, let's just uncheck OAS, CPP, employment, tax-free, and tax. So you can see here now the only page or the only metric available is our RIF income, and then that will finally flow through into the final report if you generate it or if we preview it. And I'll try to find that page. And here we are. So again, we've removed those. Only the RIF income would be available in the chart. So I'm going to go back into my report editor, and I'm going to include those back in. Now touching on our cover page. So these would be the default headings for any new report. Of course, you can come in and change the titles of these. You can remove them. You also have the option of updating your logo if you have that to be included in your client report. Now I'm going to go back into Report Builder. So once you've made those selections, if you had disabled the pages, to see them, you would just have to enable them again. And then anything that's been excluded will appear in our gallery. Anything that you've left included will be in our middle section. And you can change the order of those pages from the defaults just by clicking and dragging them up and down. Now, in regards to the header, you do have the option of adding any custom text that you want included on the header, as well as you can include the prepared by, the prepared for, and page number on each page in the header, or you can unselect any one of these. By default, it will want to include all three. And then for print settings, so this would be the default font size. You can change that to larger or even a largest font size. Same thing with margins. The paper size will default to letter. However, if you want it on legal or ledger, when you print it out, you have the option to do so, as well as whether it be landscape or portrait. And this is where you can come in and change those print settings. So lastly, the last thing I want to touch on within client report would be our filters. So right now, there is no filter. It's including all the pages available, but we do have a snapshots only filter. Our snapshots are various metrics that appear on one page. So if you wanted to see what that would look like, you could simply click on snapshots only. You can see the other pages have been grayed out, and our snapshot cards are the only ones available. So let's take a look at what that looks like in report preview. And here's our snapshots. And I'll go back and hit no filter and have all the pages included once again. So I know I've gone through a lot today, so we'll stop there. If, again, you had any questions and I haven't been able to answer them, I will get back to you later today. But yeah, if there's no other questions, again, I appreciate you joining today's session. Again, I can't highlight enough, our Help Center is a great resource for all things Snap. But in the event that you're not able to find what you're looking for, this is where you can give us a call at option one. We're here 9 to 6 Eastern Standard Times, Monday to Friday. We try to answer all of our calls. If we don't answer, please leave a voicemail. We try to get back to everyone within 2 hours. Or if you just want to shoot us an email, you can hit contact on our help center. You can type in your question, and again, it'll go to our general mailbox, and one of us on the team will be more than happy to help you out. Again, within a 2-hour time frame is our target. So with that, I'll let you get back to the day. Again,